Welcome back to Market Brief After Hours. It has been a fascinating session, one where the headlines and the price action didn't exactly seem to match up at first glance. But when you dig a little deeper, a very specific narrative starts to form. We saw volatility, we saw records, and we saw a massive flight to safety assets.
That's exactly right. If you just looked at the closing bells for the equity markets, you'd think it was business as usual, just another day of marching higher. But the intraday action told a much more complex story. We are seeing a market that is wrestling with some serious macro questions, specifically regarding the Federal Reserve's independence and political pressure. Yet investors are still willing to buy the dip.
Let's start right at the top with the major U.S. indices. You mentioned buying the dip, and that seems to be the theme. We saw a recovery from some pretty steep early losses.
We did. It was a classic intraday reversal. Despite the early jitters, the S&P 500 managed to claw its way back and actually set a new record close. It finished up 0.16%, landing at 6,977.
Just shy of that 7,000 mark. And the Dow Jones?
The Dow was perhaps the most dramatic. It had fallen nearly 500 points earlier in the session, which is a significant drop. But by the closing bell, it had erased all those losses and then some. The Dow Jones Industrial Average climbed 86 points. That's a 0.17% gain, to close at an unprecedented 49,590. Again, that's an all-time high.
So S&P and Dow both at records. I assume the Nasdaq joined the party?
It did. The tech sector staged a recovery of its own. The Nasdaq Composite rose 0.26%, finishing the session at 23,734. So across the board, we are seeing resilience. But, and this is the big but, while equities were recovering, capital was also flooding into hard assets.
That brings us to the commodities sector. I was looking at the charts for precious metals, and surge feels like an understatement.
It really was the main event. Gold and silver took center stage. This goes back to those concerns we touched on, Fed independence and political pressure on monetary policy. When investors get nervous about the stability of fiat currency or central bank credibility, they run to gold. Gold prices surged 1.91% to close at $4,595.
That is a massive move for a single session. And silver?
Silver actually outperformed gold in percentage terms, which often happens when the momentum really kicks in. It experienced a powerful bullish breakout. Silver surged an exceptional 6.47%, closing at $85.08.
6.5% in a day for a precious metal is incredible volatility.
It is. And looking at the technicals for silver, it's trading dramatically above its moving averages. We are in price discovery territory here. There's no historical resistance above these levels. It's a pure momentum trade right now.
Let's broaden our scope a bit. We've covered the U.S. and commodities. What happened across the Atlantic?
European markets generally started the trading week on a positive note, although it was a bit mixed depending on the sector. The Pan-European Stoxx 600 recovered from a morning in the red to close over 0.1% higher.
And looking at the specific country indices?
Germany was the standout. The DAX index in Frankfurt rallied for the 10th consecutive day. It recorded a 0.6% increase, reaching a fresh record high of 25,405. Over in London, the FTSE 100 advanced by about 16 points, or 0.16%.
But not everyone was in the green?
No, it wasn't uniform. The CAC 40 in Paris saw a marginal decrease of 0.09%, closing at 8,355. Italy's FTSE MIB also dipped slightly, down 0.03% to 45,707. The Swiss market index was essentially flat, up just 0.02% at 13,425.
Before we move on to the currency markets, I want to touch on Asia quickly. We saw some records there as well?
Yes, the momentum carried over. South Korea was the highlight. The Kospi index hit an all-time high, adding 0.84% to close at 4,624. That was largely driven by Hyundai Glovis, which soared due to its stake in Boston Dynamics.
Robots driving the market.
Exactly. Elsewhere, Hong Kong's Hang Seng had a strong day, climbing 1.44% to 26,608. Australia's ASX 200 was up nearly 0.5%. So globally, the equity picture remains bullish despite the underlying anxiety.
We are going to take a very short break. When we come back, we're going to dive deep into the Forex markets. I know you have some specific technical levels to share, and we'll look at the individual stocks that made big moves today. Stay with us. Welcome back. Before the break, we talked about the flight to safety in metals and the resilience in equities. Now I want to look at the currency markets. It seems like the dollar was on the back foot against the major peers. Let's start with the euro.
Right. The Euro-USD pair had a very constructive session. It rebounded to close at 1.1664, which is a 0.23% increase. What's important here for the technical traders is where it closed relative to the moving averages.
Walk us through those levels.
So the price closed above its 50-day simple moving average, or SMA, which sits at 1.1644. That's a bullish signal. However, it's still sitting just a hair below the 100-day SMA at 1.1665. It's sandwiched right there. But looking at the medium term, it's holding comfortably above the 200-day SMA at 1.1570.
So the trend is wicking upward, but it has a little bit of resistance to clear?
Exactly. If it can break that 1.1665 level, the next resistance is around 1.1800.
What about the British pound?
Sterling showed even more strength. The GBP-USD pair advanced 0.46% to close at 1.3463. This was a really strong bullish candle. From a technical standpoint, this is a breakout.
Which averages did it clear?
It pushed above all three key indicators. It's now above the 50-day SMA at 1.3397, the 100-day SMA at 1.3369, and the 200-day SMA at 1.3389. When the price clears a cluster of moving averages like that, it signals robust buying pressure.
That sounds like a decisive move. And finally, the Aussie dollar?
Similar story. The Aussie USD extended its upward trajectory. It gained 0.43% to close at 0.6714. It's firmly above its 50-day SMA at 0.6594, as well as the 100 and 200-day averages. This confirms a strong underlying uptrend that's been in place since late November.
Okay, let's shift gears to the market movers. We saw the indices hit records, but there was some carnage in specific sectors. The banking sector in particular had a rough day.
Rough is putting it mildly for some of these names. This was driven by policy headlines. President Trump suggested capping credit card interest rates at 10% for 1 year. As you can imagine, that sent shockwaves through lenders who rely on that high interest margin.
Who took the biggest hit?
Synchrony Financial tumbled 8%. Capital One slid 6%. Citigroup dropped 3%. Even the giants weren't immune. Georgeman Chase, Bank of America, and Wells Fargo were all down nearly 2%.
That is a significant repricing of risk for that sector. We also saw some drama in retail, specifically teen apparel.
Yes, it's earnings warning season. Abercrombie & Fitch lost nearly 17% after they narrowed their fourth quarter guidance. That dragged the whole sector down. Urban Outfitters tumbled 10% and American Eagle slipped nearly 7%.
Ouch. It wasn't all bad news, though. We had some winners?
We did. In the biotech space, Beam Therapeutics leaped 28%. They announced an alignment with the FDA that could accelerate approval for their genetic disease program. That's a huge catalyst.
And I saw Dexcom had a good day?
They did. The glucose monitor manufacturer rose over 5%. They pre-announced strong Q4 results and, crucially, gave a very optimistic revenue forecast for 2026. Markets love long-term confidence.
One last individual stock story. Duolingo?
A bit of a stumble there. Shares fell about 7%. The company reported strong user growth, but their CFO announced his resignation. The market generally dislikes uncertainty in the C-suite, even if the underlying numbers look okay.
Before we wrap up, we have to touch on the other major asset classes, oil and crypto. What's the latest?
Oil prices advanced. Brent crude rose 1.1% to $64.01 a barrel. It's a geopolitical tug of war. On one side, you have tensions in the Middle East and concerns about Iranian exports. On the other side, there's news that Venezuela might resume exports. For now, the Middle East tensions are winning out, pushing prices higher.
And Bitcoin?
Bitcoin saw a modest gain, up about 0.92% to close at $91,408. But the interesting metric here is whale activity. We saw a spike in spending from large holders, $286 million in dormant coin activity. That's the largest spike since early November.
Usually when whales move, volatility follows.
Precisely. We also had news that BitGo, the crypto custodian, is planning an IPO, aiming for a $2 billion valuation. So the institutionalization of that space continues.
It really was a day that had everything. Records, crashes, geopolitical tension, and regulatory surprises.
It's a market that is looking past short-term risks, like the Fed probe and political noise, and focusing on the longer-term data. Investors are hedging with gold, but staying long on stocks. All eyes now turn to the upcoming inflation figures. That's going to be the next major test for this rally.
And we will be here to break it all down when those numbers drop. That's all we have time for today. If you find this useful, please follow Market Brief After Hours on your podcast platform of choice. Thanks for listening.